The Australian share market looks set for another nervous performance today after a rather unconvincing bounce on overseas markets last night. Wall Street ended virtually flat last night after President Obama unveiled plans to slash nearly $4 trillion from the US government deficit over the next 12 years. Whilst fiscally responsible, that could spell a negative for the US economic recovery. And in corporate news, leading investment bank JP Morgan reported a 67% surge in its first quarter profits, which initially spurred gains across the banks, but analysts decided later that that was a poor quality result being driven by lower bad debts rather than revenue growth. An hour into trade, the ASX 200 index is 20 points or nearly 0.5% weaker, with the resource sector weighing on proceedings after another drop in metal prices last night. In Australian company news today, shares in regional Bank of Queensland are bucking that trend, however, rising by nearly 2% at $9.94 after the company reported a 45% plunge in its first half profits to just $50.4 million. That came about as bad debts jumped following the devastating Queensland floods. But that one-off hit masked a particularly good underlying result, with the company managing to grow mortgage sales considerably faster than the industry average. And in other news, shares in embattled construction company Leighton Holdings have resumed trading following their shocking $907 million write-down and profit downgrade earlier in the week. The company also announced a $757 million capital raising, and today its shares are down more than 13% at $24.50. Interestingly, that is exactly the price that Leighton says it auctioned off shares that institutions didn't take up overnight. And on the currency front, the Australian dollar had some strength in overnight trade, but is down a touch in morning trade today. It's currently fetching 104.8 US cents. This is Toby Grimm for Bakert Young Stockbrokers.